Welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. It's that time of the year again. Tax season is very much around the corner. Here we are in the month of July, and we know what that really means. Now, this time around, there are a lot of changes that have happened, right from the nature of the forms themselves. There are different classifications that have come into play. There are additional disclosures that you'll have to make while filing your income tax return. So we are here with help as always. And joining me is Mayur Shah, who's partner at EY. He's here to demystify all of this for us. Mayur, it's great to have you back on the show. So it's complicated season, as we know, this year around. Yeah. And I want to start with the absolute bare basics. Let's just start by understanding the forms themselves, which is the form that salaried individuals particularly have to look at.
As you know, there are 7 forms which has been notified by the income tax authorities. Now, out of which 4, ITR 1, 2, 3, 4, can be used by individuals and HUFs. Now, in specific salary returns, all 4 returns can be used by the salaried employees. However, there is a peculiarity. All these forms are designed to meet certain requirements from the tax side and also to make sure that they have appropriate information to assess the correct income which is subject to tax.
But let me ask you this. Yeah. Are these forms substantially different from what we were filing till last year? Are they simpler? Because at least for ITR 1, that was supposed to be the premise that, make it a simple one-page form.
Yeah, so ITR 1 is, as name suggests, the ITR 1 is known as Sahaj. It is a little simpler than what it was earlier. Earlier, we had to supply a host of information which is not required. We used to fill up as not applicable and, used to file the return. Now, those information request is also not there in this form. However, having said that, Sahaj will be used only by the person who is drawing salary, has only one house property, without any carry forward or brought forward losses, or they have income from other sources such as interest, dividend and other income. So, Sahaj is used only by those people, those personnel. Essentially, if a person is drawing more than 50 lakh rupees income, will not be able to use this ITR 1 form because there are several other disclosures which are required to be done, which is not there in this form.
I can actually say that this is ITR 1 and this is the slimmest of the lot because the other forms are still quite bulky and I have several of them with me right here. But just to go over people who can file return via ITR 1, number 1, you have to have your income less than 50 lakh rupees.
That's
all
right.
Sources put together and only one house property you mentioned.
That's right. That's correct.
Okay. So let's now move to the next category. If your income is going above 50 lakhs, then which are the forms that you need to look at?
So then you can look at ITR 2, 3, 4, depending upon whether you have business income or you do not have business income. Okay. Now let me start with ITR 2. The way ITR 2 works is that the person who is drawing all salary income, more than one house property, capital gains and income from other sources. Apart from that, if a person is having business income arising from the partnership firm such as interest, remuneration from the partnership firm, then those individuals can file ITR 2 if they do not have any other business income to be reported.
Okay.
If they have any sole proprietary concern or they are doing their own business or a profession, then they cannot use ITR 2.
So if you have your own business, you're generating income out of your own business activity, then you can't do ITR 2.
Yes.
But if you're a partner and you're earning salary, interest, some form of remuneration, though you're a professional, you can still use ITR 2.
That is right.
Capital gains you mentioned. So obviously the capital gains that you might be earning, they are covered in ITR 2. Are they also covered under ITR 1, people earning less than 50 lakhs,
no,
but,
it does not
earning capital gains?
It does not cover that.
Okay, so if your salary or your annual income is less than 50 lakhs, but you're making capital gains, let's say by sale of property or by selling shares.
Correct.
Not ITR 1 is not for you. So then those people need to look at perhaps ITR 2 or the other forms.
2 or 4, whichever is.
2 or 4. So let's then shift the conversation forward. We've covered 2. Who should go for ITR 3?
Everyone can go for ITR 3. Especially this is designed for persons who are carrying on business or professions. because it requires to supply lots of information relating to the business, relating to the claims which are being made for the business purpose, the accounting policies which is being followed to determine business profits or professional income. So it is used for that reason. So ITR 3 is kind of full-fledged form, one can say, which covers anything and everything, whichever individual can fill that up.
The bulkiest of the lot, I can see. It requires, I'm guessing, a lot of disclosures and a lot of information that has to be shared out.
Correct. It has around 33 schedules to be filled up, so it's quite huge in that sense.
Okay. So ITR 3, in case you have your own business and then therefore you have additional disclosures. That brings us to ITR 4. And you gave an option of people who do have capital gains but, are earning less than 50 lakhs. They'll have to look at perhaps 2 or 4.
No. So ITR 4, you are right, but ITR 4 is to be used mainly by the individuals who has business income, but they are paying taxes on a presumptive basis.
Okay.
In that situation, they can use ITR 4. ITR 4 also can be used by the persons who are drawing more than 50 lakhs of income.
But primarily for people generating business income, not for salaried individuals.
Business income subject to it is being offered to tax on a presumptive basis.
Okay.
If they are not offering income on a presumptive basis, then still they have to use ITR 3.
Okay.
So that is the difference between ITR 4 and ITR 3.
So broadly speaking, ITR 1 for those earning less than 50 lakhs, very simple return filing, not too many complications, no capital gains, they stick to ITR 1. As you mentioned, business income and a complicated disclosure, full-fledged disclosure comes in ITR 3. And 4 becomes Sugam, or ITR 4 is for someone who has presumptive income.
Correct.
Okay.
Those who are paying taxes on a presumptive basis on their business income or professional income.
Where does this leave the highly remunerated, rich or high salary earning individuals who are not indulging in business sort of transactions? They don't have business income. It is salary income, but it's above 50 lakhs.
So they can use ITR 4 or ITR 2 as the case may be.
Okay, fair enough. Now that we've understood the basic sort of classification of the forms, we're going to take a quick break, but we've only just gotten started because this year there are several additional disclosures that you will have to make when you're filing your income tax returns. You want to catch this one? We'll be right back after this break.